Hello traders, Gary Wagner here, just about 10:15 in Honolulu, 4:15 in New York. It is Wednesday, 22nd day of June 2016, and this is the daily report for gold and silver. We have modestly lower pricing in the precious metals markets. Gold currently trading off about $4 on the day when we look at COMEX, which is currently at $1268.40, high $73.50, and the low on the day is $63.80. Now, when we look at spot, or what we call Forex, currently $1266 and change, low $61.41, and the high $1270 on the day. Of course, all of our subscribers are flat. We are sidelined as we are only about 10 hours away from the referendum vote set to begin in the United Kingdom. Before we look at a gold chart this morning, as I explored in trending markets just a few moments ago, and that is an uncanny positive correlation today between U.S. equities, and that's vis-a-vis the E-mini here, and the British pound as we go into roughly 10 hours before Brits go to the polls and vote on whether or not they will leave the European Union. What we can see here, this is a simple line chart, 60 minutes, but what we can see here is a real strong correlation in the way U.S. equities moved in relationship to the British pound. You can see that not so much tick for tick, but as this market rose, we saw equities rise. And then as they fell, meaning the British pound, we also saw U.S. equities fall. So the one thing that we can derive or glean from this chart is the fact that U.S. traders, U.S. equity traders, are not only closely watching any possibility as this vote comes closer and closer, but also the sensitivity between the British pound, which of course is up when they believe that the European Union and Britain will remain together as opposed to a separation of sorts. Now, to kind of temper the chart we just looked at, the chart that I've just created is British pound on the top and gold vis-a-vis COMEX on the bottom. And it's quite obvious when we just look at this that there isn't that same type of correlation between moves in the underlying British pound and moves in gold. So as expected, we are looking at a day in which we have quiet activity. I actually expected that at the onset of the week, and a little volatility as we went closer to the vote, although the majority of the reaction to potential outcomes really occurred more than anything yesterday. We saw some idea of an occurrence maybe on Monday of this week. Of course, we had that sizable move up on Friday. We get a bearish cross. That is the two-day pattern that we can definitely identify, a bearish Harami cross right in here. To a Western trader, this two-day pattern would simply be called an inside trading day, in which the open and close is inside the open and close of the prior trading day. We now have had 2 days of lower pricing, although today's lower pricing is really a couple of dollars, only down about $3-4 on the day, currently trading at around $12.68, $12.69. That being said, we do have this one top here. It's not fib based, but that would be the first place should the market continue under pressure. We didn't even hit that as a low today. We did get a lower low. We did get a lower high. We got a lower close though. So we had all the criteria for the market moving lower. We want to see how it reacts here. But as I said yesterday, that because of the fundamentals in the market, the uncertainty as the outcome to the vote that will really begin in about 9 to 10 hours from now, this market is fundamentally based more than many times in the market, which tells me that, oh yes, I am looking for a continuation of a sell because of the patterns created, the bearish Harami cross, and the confirmation and continuation. On a technical basis, that tells me that this market should head lower. On a technical basis, I would look for support roughly at about 1245, and that again is based on a 61% retracement of the move from 1200 to 1320. With all of that in mind, if the vote comes out and they leave the European Union, we should see this market really take this as a bottom point, and we could see this market sail dramatically to higher prices. In other words, I think that if the referendum comes back with a Brexit, that we'll see this market scream back up, and at least the premium up to about 1300 will be regained, whether it's a matter of minutes, hours, or a day or two. It will be quick. However, if the anticipated outcome of staying in the European Union is actually how the vote unfolds, we could see this market stabilize a little bit. We could actually see it move down a little bit. But I think a lot of the premium which was put into the market in anticipation of a possible exit quickly eroded. And for that reason, I don't see on a fundamental basis a tremendous pull for downside. So we are in peculiar times, and as you know, we are sidelined in the market. We will remain sidelined until we get some sort of an indication as to the outcome of the vote. Traders, if the vote comes out where there's going to be an exit, we could see this market trade dramatically higher. You might want to initiate a long, because that's going to happen, and that's going to unfold, especially in the mainland, during the early parts of the evening and late into the night. Of course, also, if they do leave, there's going to be repercussions that are felt not only tomorrow and Friday, but through next week as well, because we would expect a huge knee-jerk reaction of equities plummeting. And at that point, to me, there would be an excellent buy opportunity in U.S. equities. But I'm getting ahead of myself. Let's see where the vote takes us. Let's go from there. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow after the vote has come in the UK. Bye-bye.